I can't shake the simplest feeling beyond the ghost. We stand on the opposite shore. Hello, Ramona. I reach through mysterious ceilings, my only hope. I look for the things I don't know. We stand on
All right. Hello, DMV. This is Mona Jones McClain, and I am coming to you live from 11707 Rikers Road. And this is the Insurance Guru Show, where we talk about all things insurance. Today I have a guest with me, Mr. DeCarlo Harrison from DeCarlo Harrison Insurance. Please introduce yourself.
Hi, everyone. Hey, thank you so much for having me on, Ramona. As she mentioned, DHarrison Insurance is the name of my agency. I've been in the business, it'll be 18 years this year. So, yeah, I know. I didn't want to say that on. I was trying to figure out a way to not have to say that on live, but
that's all right.
I got that insurance age.
That's okay though, because in this industry, the longer you're in it, you're supposed to have some credibility. I did a show 2 weeks ago about the credibility of minorities in this industry and how some things that should work to our advantage do not, and how others things do, and how we should respond to it. Walking in the door, it is already presumed that we don't have the knowledge base to discuss anything intelligently. However, we shouldn't focus on that, and we shouldn't get hypersensitive. It talked about the 4 different areas of reasons why those mid-range positions and insurance in the finance industry have lower minorities, and part of it is because we quit and we leave instead of making our way through and ignoring the small stuff, because we really do have the skill set to go to the next level and to become successful in this industry.
Well, I totally agree. I've been beating that drum for quite some time. We have, well, for starters, there's just not enough of us in the industry. Let's start there. But I've been trying to do as at least my part in introducing this industry that's been so good to all of us to people that look like me every day. Representation matters. I actually had a former or a prospect that was working at the time tell me that, and so it really, people want to do business with people that looks like them. And as people, black people in this industry have to, we have to endure more, just like we have to do, everywhere we are, no matter what industry we're in. Our professionalism is often called the task. And I know this podcast is not about that anymore. I missed that one, but we could do a whole podcast on things that I've been through in this industry.
Well, maybe we're going to talk about that next month. We'll have you back. But it is important. I think we need to reiterate it, especially to our community, because of some of the obstacles that we have to go through. Frequently, sometimes when you walk into our office, it may not look like someone else's office, or we may not have as many staff as other people. It does not mean that our integrity is not as understanding, or our professionalism or knowledge is not as competitive as some agent that has 10 producers sitting in their office.
Right. And we didn't have the luxury of creating what it looks like. There are only a handful of, as far as representation is concerned, there's really only a handful of agencies or carriers that date back as far as, more than a few decades. So we didn't have the luxury of painting the picture of what it's supposed to look like. So when you walk into these offices and, if you're a client and you say, hey, I'm accustomed to it looking this way, and you walk into an office that doesn't look that way, then of course there's a little bit of reluctance. But like you said, that should not be a reason to not have a conversation with someone and, and do business. It just, we didn't design that. We've been guests in this industry, visitors in this industry for so long. And now that we're actually starting to claim a stake in it, but we wanted to look like and represent us.
Right.
And just like all the other industries that I think we're doing that with. And I mean, it takes time, but I think slowly but surely we're getting there.
Well, that is why I do this show. I do this show to share the knowledge that I have gained with our community, to explain to them, so I don't get phone calls from the little old lady that lives around the corner and says, I get nothing, you raise my homeowners rates, I'm leaving you. And I got to say, wait a minute, wait a minute. Tell me what's going on. Well, also get calls from individuals. This was one actually that provoked this show. I got a call from a young lady who's had 4 claims in the last 5 years. She is now currently without insurance, and I've been looking for a carrier that's willing to accept her now for about a month. The first 2 claims happened within 6 months of her moving in, and they were back to back. And they were both, I think one was a water claim and one was, I don't know, something else. It doesn't even matter.
Right.
The 3rd claim was a weather claim, and then she filed a 4th claim about 3 months ago, and she's surprised that they non-renewed her. So I said to her, when you purchased the house, like, what was the condition? She said, I don't know, I just moved in. I said, well, I did a show. Actually, I do a seasonal show with a landscaper where I talk about walking the grounds of your property to see what's going on. So I say to her, have you been walking around? She's like, no, if it ain't knocking me over the head, I don't go looking for it. And I'm like, no, you got to go looking for it. As a homeowner, you are responsible for maintaining your property and alleviating any obstacle that could cause a claim going down the road. It's a piece of wood with bricks and stones and concrete attached to it. Eventually, it will give out.
Yeah.
But the goal is that you do the maintenance stuff along the way. Go right ahead. I'm sorry.
No, I mean, the key, what you just said is important. Like you gotta want to go find it. And I tell new home buyers and home buyers all the time, if you don't go look for it, then adjusters are going to look for it. So who would you rather, adjusters are out there doing, they're going to look for, proximate calls. And if that proximate calls was something that was wear and tear or routine maintenance, then there you go. There's your denial, right? So look, it takes a little bit of education on the front end to make sure that if something happens, you're just well equipped. And oftentimes, and I've been doing this for a while. I don't necessarily like to call our industry to task, but it's our fault. It's brokers and agents' fault. These uneducated buyers, especially the ones, and I'm not talking new home buyers. I'm talking, I get calls and calls all the time, and so have you, from people that's been in their homes and had these for decades, and then you explain something to them, and they say, "Well, that's never been explained to me before," or "It's never been explained that," And if half of those calls were accurate, right? Let's say 50% of those calls are not true. Let's say 50% it was explained, and maybe they just. The other 50, there still leaves a big chunk of people where these agents and brokers just aren't doing a good job at walking people through these policies and talking about, one, what they have, and two, how it's going to respond. Like, what's the policy actually going to do should a claim happen? That's not happening, and that's on us.
I agree. I think that there needs to be a better explanation between a covered accident and or incident and something that should be under warranty.
Yeah.
And quite frequently, homeowners construe something happened to me and you're supposed to take care of it. But this didn't happen.
Right.
This happened because you didn't do A, B, and C. And we're not going to pay for water seeping through your concrete foundation when you knew it was cracked 3 years ago, and you probably should have gotten somebody out there to seal it.
Yeah.
That's not a backup sewer and drainage claim.
Right. Man, if we had $1 for how many times we had to tell for that conversation.
Right. Like, just leave that out. It's one of the reasons why I don't get involved in claims, because I know I'm going to help the customer and tell them what to say and not to say. And in order for me to keep doing this and not lose my license, I just need to stay out of it.
Oh yeah. First of all, claims handlers, claims adjusters are some of the brightest people in this industry when it comes to coverage. So they know that thing inside and out. And you, me, no matter who it is, we don't stand a chance with a seasoned claims person anyway. So, but again, for me, it's all about the conversations happening on the front. And so when you get that phone call, actually, I had a young lady. I just did a business, and we were going through the whole thing. We're about to bind the coverage, and she sent me over a list of questions. And one of those was, will my rates ever go up? And I thought of you because you had sent me the email, and I said, wow, not personal, but commercial. But the question is the same. And some people are just so afraid to answer yes to that question. And as I was typing it back, right, as I was typing my response back, I said, how many brokers are not afraid to say yes? At some point, your rates will change, and just telling them like it is. And here's the reasons it can change. So many people are going to say no, rates won't change, or whatever. They're so afraid of not getting a piece of business, so they withhold the information. And I don't want to say they're not telling the information, but they are definitely withholding information. Right.
You didn't ask. They won't tell.
Yeah, they just won't say anything because they want that new business on the books. Right. And that new business comes back to bite them, right? And it hurts their loss ratio. And they just don't see they don't play the long game. So I had no problem telling her, yes, your rates will absolutely change at some point.
So let's get into that. Let's talk about why our rates increase. In this post-COVID environment, we know that part of it is during COVID, we had difficulty getting materials. The cost of labor went up because of the extra costs associated with just being able to come on your property and the protocols that had to be put in place to interact with people. That cost increased.
A couple reasons. She was talking about things tightening up, right? Right now we're still in a hard market in the insurance industry, and that just means underwriting guidelines are tightening up, and we're still also in a bit of a tough space economically. So the cost of everything is going up with inflation, and so the cost of goods and materials are no different. Materials and labor are no different in our industry than anyone else's. So when we have to explain to the buyers one of the reasons their insurance costs went up, well, one of those reasons is the cost to replace your home or the cost to replace your business, whatever property we're talking about, went up. Just like the cost of food went up, the cost of everything goes up. So the cost of wood and bricks and, drywall and all the good stuff it takes to build a house, all that stuff went up as well. So, and that's a really, really good segue into making sure that you have a broker or an agent that's walking you through the policy and it's going to let you know when that coverage A or that first limit on that policy is going to increase or even decrease. Hey, you're back.
About that. There we go. I don't know what happened. So my intern that works with me on the show is actually starting college this week.
That's awesome.
Right now, I'm technologically handicapped.
Hey, we'll get through
Not that I don't know how to do this, but when you don't do it every week, you just sit and you point.
Yeah. I get it. Now I didn't know if I was still live or not.
You were.
Oh, okay.
Yeah,
Okay.
for some reason the app just flew off of the screen.
Okay.
We'll figure that out next time. But anyway, we were talking about the reason why the rates are going up. So I was mentioning materials and labor costs. You want to get in on that?
Yeah, I was just saying while you were off, the materials and labor costs are no different in our industry than anywhere else. I mean, if we're going through tough economic times in this country where the prices of everything's going up because of inflation, it's no different than the cost of what it takes to build a house. So, wood is more expensive, drywall is more expensive, brick, veneer is more expensive than it used to be. And as well as the labor, in the construction industry to build those, everything's went up. So two things have to happen that I see a lot of times not happen. One, the original conversation of in the beginning of what these numbers and limits mean on your policy is not happening. Because if it were, then you may not necessarily get a phone call and say, "Hey, what's going on? Why's my rates going up?" Or you may get that question and it's easier to explain. So if you look at your policy, your reconstruction costs should be going up as well, right? So oftentimes they see the rate going up. They don't necessarily equate that to coverage A increasing. So if the cost to rebuild your house or the cost to rebuild your commercial property went up because goods and labor went up, then that number should be adjusted to reflect that.
Right. They only get excited about it when they consider selling it, because now my house is not worth $285, it's worth $224. But those increases in the value trickle down across the board.
Absolutely.
Mm-hmm.
So
go right ahead.
So I was just going to say, I would start there. Is that conversation happening in the beginning? And oftentimes it's not. But then as you explain it to your buyer, don't just regurgitate. Then you have to explain, as these prices and things fluctuate, so should your policy, right? Policies should be malleable. They should be moving. It's not one size fits all forever. And way too many times policies come across my desk and your desk, and it's the same exact policy they had when they bought the house 15 or 20 years ago.
Right.
In the last 20 years, we've had 2 recessions. We've had multiple, adjustments Yeah, that policy should, it's like a roller coaster. And if your broker didn't do a good job at adjusting and making those changes, and your policy's just been a straight line for 20 years, then there's no wonder you're mad. I'd be mad too, because I was led to believe.
The biggest thing is the changes in insurance and how it affects their house note.
Yeah, that's exactly. So I was led to believe, if I was led to believe that it's a fixed cost, right? And then it turns out to be a variable cost, I'm upset too.
Exactly. But there are things you can do to make, adjustments. I have had people call and say, well, my house is not worth that much. Well, the calculator is saying that if we had to rebuild your house, this is what it would cost today. One of the things you can do is increase your deductible, and which will allow you to self-insure more and will lower your rate back down. We can make adjustments and re-lower your replacement cost value down, but you understand you jeopardize actual replacement if we go below 80%.
Oh yeah.
Mm-hmm. And what that means, I'm sorry, go right ahead.
No, go ahead. I was just gonna agree with you. So you gotta have that conversation.
Yes. Well, what that means is if your house is worth $300,000 and you choose to go to insure it for less than 80%, which is what, 200, let's just say 280,000. It's not quite, it's like 273 and something like that. Anyway, that's the math. If you decide to insure it for less than that amount, then what you do is you remove the quote unquote guaranteed replacement cost or the replacement cost options, because these days it's not guaranteed. There are options, whether you have extended replacement costs or guaranteed or full replacement costs, or 25% more than what we are insuring the house for, 50%. So there are different replacement cost options. You need to look at your policy and see which one you have. But if in fact you go lower than 80%, then what you do is you remove those options from your policy and we start to insure your property for actual cash value. And that is usually a stated amount. Like you're saying, this is all I want if my house is paid off. The problem is if you have a mortgage company, your mortgage company may not like that.
Oh, yeah.
Because they are invested in your asset and they want to make sure that the asset is protected. Mm-hmm. The other thing that I get a lot, DeCarlo, is, well, I don't need homeowners insurance. My mortgage company gave me homeowners insurance.
Well, if your mortgage company gave it to you, then you need homeowners.
It's not homeowners insurance.
No, absolutely not. Oh.
No, what they're doing is they're only protecting their interest in the property. They're not going to rebuild your house. They're going to take their money. Your house burns down. They're going to take their money, pay off your loan, and keep stepping. And you are stuck with the burnt shell of what used to be your house.
Yeah, and then we got to talk about what led you to the forced place coverage anyway, right? Because typically you're not insuring. These companies. So banks aren't in the insurance business. Well, they are now, but that's not what they really want to do. They don't want to manage insurance policies because that's a whole reinsurance thing. So if they have to force place insurance, then something went wrong. Maybe you didn't have enough in escrow and you just didn't want to re-up, or you were behind on your mortgage so much and then you just kept ignoring the notices. Something went bad. Something went really, really bad if forced placement was what the bank decided to do. Right. So, and again, that's just going to be coverage A. So you're not getting B, you're not getting liability, you're not getting anything for your stuff, the contents, usually. It's just coverage A. It's the shell. It's their property. And I tell new home buyers all the time, when I do these new home buyer seminars, one of the things I say all the time is you got to be honest with yourself and everyone else. Like, yeah, you bought a home, but it's more the bank's in the beginning than yours. It's more theirs than yours. So in the beginning, until you start to pay down your mortgage, in the beginning, they're going to tell you, they're going to dictate exactly what they need this thing to look like. Right. So when you say they may not be happy with going down to ACV, they probably won't. Right? Because they want their place, rebuilt. They might not be happy if you raise the deductible so high, because if you raise it too high, they already looked at your ratios and they looked at what you can afford. So they're saying if you raise the deductible too high, this buyer can't afford it, right? And then my property, this is the bank, my property, because they own it more than you do in the beginning, it's less likely that you're going to come to get something fixed if the deductible's too high. So oftentimes they'll say, we don't want a deductible any higher than $1,000, or $1,500. So you may not even have that on the table. And now when you start to pay down your mortgage and you start to pull back more of the equity in the home from the bank to yourself, which means you own it more, you have a little bit more flexibility. But in the beginning, definitely not. You know, the bank's going to be on top of that. But fourth place is yeah. I don't get many. A lot of that come across my desk. That's probably more in your world. But for me, it's having a conversation about why it happened. Why is the bank putting insurance on there?
Right. Why did you let your policy cancel? Why is the insurance company not willing to insure you?
Yeah. Let's talk about that.
Yeah, because that's just important. It's a part of the process. It looks like I got a question coming in. Hold on a second. You know, you guys, the link goes out for you to call in. You can call in. I understand you don't want to call in because you don't want anybody to hear what your voice sounds like. But you can call in. It's okay. It makes the show exciting if you call in. But hold on, I got a question.
I love questions.
Okay. I got my homeowner's insurance policy from I'm not gonna say the insurance company, one of the big three, okay? And they're canceling me this year because they're canceling me this year because I had 3 claims. What can I do?
we already talked about that, but
there is a company called Joint Underwriters.
JIA.
Yeah, in the state of Maryland. I actually just submitted my application to be able to write business in them because I got the young lady who had 4 claims in 5 years. Yeah. But if you can find a JIA agent, JIA is for homeowners who cannot go anywhere else. And who have difficulty getting coverage. Now, understand that the rate is not going to be like the company you came from. It may, and if you have a mortgage, it may cause you that mortgage to go up a little bit. However, it's either JIA or what we were just talking about, the fourth place insurance. I really wouldn't go with the fourth place insurance. Go right ahead.
I would say yes, but here the way that what you said is 1,000%. What I do is I walk them through specifically the steps. So if they got canceled or they're getting non-renewed by one of the big three, which is standard market, then I would walk them through the difference between standard and E&S, right? Because I would probably explore like a Lexington or someone out there in the E&S market before JIA. Right. To me, JIA, it really is the last resort. Not because it is the last resort, but because also the process, right? The process for JIA is long and gruesome. Yes. And you don't get the coverage, obviously, until the inspections happen. So JIA truly is the last resort because of what it takes for you to actually get on board with them. So I would have my broker exhaust all the admitted markets and all the non-admitted markets, once you get the 2 declinations before we went to JIA. And I would have them show me, transparency is key, right? So I would have them show me where they sent it to. Right. And then obviously ask them if they're a JIA agent, because if they're not, then they got to punt that to some other agency, or they got to or the buyer has to go approach JIA by themselves, which they can. But it's a gruesome process. So I can imagine being someone not even in the industry having to go through that without the help of an insurance professional.
Exactly. Let's talk about credit. Okay. That's on this list here, talking about how the insurance company is using credit to determine what the amount of the increase is. So just to put it out there, just to say the words, every insurance company is experiencing homeowners insurance rate increase. It's across the board. There is no one that is not doing it. You even got some carriers that have said we're not writing new business. There aren't enough homeowners policies that can come in to justify our loss ratio, so we're not writing new business.
And I would say property coverage, period, because commercial property is going through the same thing.
Yeah.
So property, period, across the country is going through this.
Yes. And then there's some companies like Foremost will do a rental dwelling policy right now, but they're not doing multi-units. So it has to go somewhere else. So all of this is going on. This is going to happen. But in determining how much of an increase you will receive, they're using that old insurance score risk factor. That's how they are deciding whether or not you get a 4% or you get a 24% increase. Right. We talked about last week, we had a gentleman on talking about credit and how important credit is and how to maintain credit and what to do in order to improve your credit. And we also talked about the risk factors, the fact that it has been statistically proven that those with a lower credit score tend to put in more claims and more fraudulent claims because it's an affordability issue.
I get this credit conversation a lot, and I got to tell you, I've been torn for years about it. At first, I was anti-credit. I hated when insurance companies got in the business of pulling credit or checking credit. My position on that has changed a little. Mm-hmm. I understand it now. It's fair. You may not like it, but it's fair. So just like any other entity that checks your credit, and the reason they check it for is the same reason insurance companies check it, right? So if you're, if your credit says you are not likely to pay, then you're going to pay a little bit more because you're higher risk, right? No different than a credit card would do. No different than a car. No different than CarMax would do, right? No different than a lender that's you buying a home. You don't. Everyone's rate's not the same. It's dependent upon your credit, and that credit means how likely you are to pay. And when that's top line. Then when you dig deeper into the data, because insurance industry is big data, right? Like you said, we also have additional data that says people with low credit are likely to file frivolous claims, right? We have that. We can connect that dot in our industry because we have that data. So couple that with, so there's a bunch of bullet points that that credit gives the insurance industry. Right. That likelihood to pay is just one. Right. So my position on it has turned into it's fair, and I explained that to buyers, just like that. If your credit is bad, then the insurance company has a right to charge you more because you're higher risk. Right. Period. And now the only time I don't like pulling credit, if I'm working with a new home buyer, I don't like to pull their credit unless they guarantee me. If the carrier is guaranteeing it's like a soft hit, it's not going to show. Right. Then I may take their word for it. But I don't like to pull new buyers. I don't like to pull new buyers' credit in that process. Mortgage companies don't like it, because they're in a very fragile point.
Because credit is fluid.
Yeah, they need everything to stay still.
Right. It doesn't really stay still. It can go up and down as the wind blows sometimes. You could do one thing. I was talking about this last week. I had these credit cards for Synchrony Bank. And I don't know if anyone, I'm sorry, did I say it out loud? Yeah, I did. Okay. No. And what really irritated me, I got this, I do theater, right? Mm-hmm.
I was wondering what we were going to talk about.
Yes, I do theater. So I got this credit card with Joanne Fabrics because I needed this really elaborate sewing machine. And they said, oh, let's see if you can get approved. So I got approved, and I bought this beautiful big time sewing machine, and I paid it off, and then the credit card sat for like a year and a half, and because I didn't need another sewing machine. But in the interim, I'm trying to refinance my house and pull some equity out because I bought a building. Have you been by the building?
I have.
Beautiful.
Yeah, I was there when you first got it.
So I bought this building, and of course I had to do all these repairs and make it farmers ready and paint it blue because it was yellow.
Whole nother
right. So I spent all this money. So I'm refinancing my house, pull some equity out to pay off all my credit cards. And all of a sudden I get this phone call from the credit union. Your score dropped a little bit. Well, why? Because Synchrony Bank canceled my card because I haven't used it in a year and a half. And that changed my debt to
ratios.
Right, ratio. Yeah. Because instead of having an extra $4,000, and I had $4,000 on the card because the sewing machine was like $2,200. It's beautiful too. I love it. And it's got all this embroidery stuff on it. It's just wonderful.
Your utilization.
What?
Your utilization went down.
Yeah.
It went up. Actually.
It went up because I didn't have as much credit.
Yeah, let's go.
So I called them. I was so upset. And they were like, well, you didn't use it for a year and a half. You can always reapply. Why would I do that?
Yeah. They don't.
So my answer to that was I went to my other carriers and asked them to increase my limit. And that allowed my credit limit to go up higher and lower my utilization, which put me back where I needed to be in order to refinance my house. But I think that in understanding credit and working with credit, you need to be aware of that and be able to monitor any changes because it is fluid. Like you can have one score one day, and I don't know, you go out to dinner to Ruth Chris and spend $350, and now your credit score dropped 3 points.
Oh yeah,
because you put that on your credit card. So it's something that has to be constantly monitored, like your bank account.
Yeah, and again, my reasoning, what you're saying was one of my original reasons why I did not really agree to credit score being used, because credit to us in our community has always been a barrier to entry. It has always been a speed bump for us, and no matter what we're doing, and I didn't like credit being used because of that, and now I have to, again, I have to be fair. These carriers they're not fair when they use credit. They should be using it. We just gotta step up our credit game as a community. But, credit was always a barrier to entry for us for everything, dating all the way back, going back decades. We've always had an issue with credit all the way back to the redlining days. Things being denied, loans being denied, credit cards targeting. Credit was a mess. So when insurance started using it heavily, because they've been doing it for a while, but when they started really, really using it heavily, I remember when you used to pick up the phone and it was like underwriter discretion. You could pick up the phone and call an underwriter and say, hey, look, this person's is a new home buyer, right? Can we waive the credit check? And they'll say, okay, we'll just use like the Clue report or whatever it may be, Like you could pick up the phone and talk to an underwriter and they can make that call.
Well, you had an underwriter designated to you, and I remember I had an underwriter at that other farm company. His name was Randy Nicely. He taught me everything I ever needed to know. And first thing, as soon as I called him, he would say, tell me your story. And that's what it was about when you had a conversation with the underwriter, was telling him the story of the person that you were trying to insure, because it was a person. Yep. Not a number.
Absolutely right. And that's what we're getting away from when you take the human connection out of it. So now you're getting bots and computers and You can't even get underwriters on the phone nowadays because they're so short staffed, and now it's all automated. You can't really. It's getting harder and harder to tell that story.
Right.
And and the same things on the commercial side. I remember you could pick up the phone and talk to an underwriter and say, "Hey, I know you need financials here, but this and this and this is going on. Can we get by it? But they have this and this." And sometimes you get lucky. More times than not, probably. But now underwriters are sticking to their guns when it comes to financials and stuff on the commercial side. It's just the way of the world now. So credit is super important. It has to be safeguarded because now everyone's using it, and that score matters. You're going to see increases in premium.
It's exactly why I do this show, so I can teach our community the rules of the game, little bit by little bit, educate them and help them to understand the direction we're going in and what we need to do to continue to succeed. DeCarlo, I want to thank you so much for being on the show today.
Thank you for having me.
Give everyone your information.
Again, DHarrison Agency or DHarrison Insurance is the agency. The website is DHarrison Agency. So it's www.DHarrisonAgency.com is the website. Number is 443-531-7708. That's just the best way to reach me. That is my cell. But the office number, if you want to reach me, that's the best way to reach me. I do text, text messages are fine, all that good. Any way to contact me.
Give us the number again, a little bit slower. 443-531-7708. And the email is my first name, DeCarlo at DHarrisonInsurance.com. Okay, so that's DECARLO Insurance.
Nope, it's DeCarlo at DHarrisonInsurance.com.
I want to thank you so much for being on today. I'm hoping you will join me next week.
Hey, shoot me the information. Absolutely. I love it. This is awesome. You and I, we can talk for hours. And we have done it.
Yes. It's because we both Gemini.
That's exactly what it is. That's exactly what it is. When I saw an episode come across, and I said, "How dare her not have me on yet?" This is unreal.
Oh, yes. We gotta talk. DMV, I want to thank you so much for listening in today. Hey, remember, if you have any questions or concerns, please give DeCarlo a phone call. You heard his number. We're going to put it in the comment section on YouTube and Facebook. We'll also include it on our podcast information. If you also please give me a call at 443-660-7131. I'm so happy that you listened in today. I hope you learned something. This is the Insurance Guru Show where we talk about all things insurance. Thank you so much, and we are out.
I reach through mysterious ceilings, my only hope. I look for the things I don't know. Hello, Ramona. I can't shake the simplest feeling beyond the ghost. We stand on the opposite shore. Hello, Ramona. I reach through mysterious ceilings, my home